In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, big tech under antitrust scrutiny. The Justice Department says it will review practices of online platforms, opening a broad antitrust review of tech companies. Alphabet, Amazon, Apple, Facebook, all in the crosshairs. Plus, spotlight on SoftBank, the Asia tech giant, close to announcing the launch of a second tech fund on top of its $100 billion Vision Fund. And oh snap, bullish bets pay off as the social media company counts far more users coming back every day than expected. But can the growth keep up? We begin with breaking news. The U.S. Department of Justice is poised to open a broad antitrust review into big tech, putting Alphabet, Amazon, Apple, and Facebook in the spotlight. Regulators are looking specifically at whether U.S. tech companies are so big they stifle competition. This, of course, ratcheting up pressure on tech giants already facing scrutiny from Europe to Capitol Hill. Joining us to discuss our Bloomberg Tech executive editor, Tom Giles, our Bloomberg Tech reporter, Mark Gurman, who covers Apple, and Ben Brody, who covers tech's corporate influence for Bloomberg in Washington. So, Ben, I'll start with you. What do we know?
Well, not a whole lot. I think what we're looking at here is a sort of complement to an actual task force that the Federal Trade Commission announced a couple months ago. So the FTC and the DOJ, they share antitrust, oversight. So I think that we're looking at a sort of complementary task force. What's especially interesting to me is that we had believed that DOJ and FTC had basically split up the companies. The DOJ would only be looking at Google and Apple. Now it seems like they're going to be taking something much more high level. They could be doing criminal referrals to other parts of the agency. They could be working with FTC, and some of these companies could actually be facing scrutiny from both agencies.
So, Tom, let's talk about this, because the DOJ had taken oversight over Alphabet and Apple. The FTC was going to be looking at Facebook and Amazon, but now this means that both agencies could be looking at some of these companies?
Potentially. What it looks like the DOJ is reserving for itself, and its antitrust division in particular, is a very broad, it's giving itself a lot of leeway here to take a very broad look at these industries to find out whether further action is needed. This is basically them sending the signal that we're casting a wide net, we're not going to limit ourselves. All this talk about us getting this and the FTC getting that, we're not going to be bound by that. We're not going to be limited by that. We're really looking at the technology industry in a broad way. We've talked a lot about how this, there's a lot of people who believe that antitrust regulation in the U.S., which dates back more than 100 years, needs to be updated for the 21st century, needs to be updated to account for social networking, for these retail platforms that have taken over the internet and are killing the retail industry, needs to be updated for the kinds of things, for search. And all of these services that are being provided digitally from the Apples and Googles, Amazons and Facebooks of the world. And so this is what seems to be the DOJ is actually now doing. We're going to take a look at this. And do we need to look at these industries in a new light?
Meantime, all four of these companies appeared on the Hill for an antitrust hearing with U.S. Congress people. Mark, talk to us specifically about what this means for Apple. People like Senator Elizabeth Warren have made the case that Apple should be broken up, that they shouldn't be running the App Store and choosing the apps which run on it. At the same time, the argument has been made that Apple in particular certainly doesn't have majority market share when you look at almost anything.
Yeah, that's exactly right. It's an interesting case for Apple because, like you said, they are not the dominant player in any of their major markets, whether that's services or hardware. The iPhone is certainly not the biggest smartphone player. You can make the argument that they have a strong hold on the smartwatch and the tablet markets, but again, those are much smaller markets. When you look at services, Spotify far exceeds Apple Music. Their email apps and productivity software is well behind Google, Microsoft, and others in China in usage. But if you look at the App Store in particular, particular. The crux of the issue is that Apple charges a 30% fee to third-party developers, a fee that obviously it does not charge itself. So if you look at Apple Music compared to Spotify, and this is Spotify's argument, Apple isn't paying a 30% share of what it gets for Apple Music to anyone, whereas Spotify is paying 30% to Apple. So that's where the issue is, where they feel that Apple has the competitive advantage because they're on the same platform, but they're not having to spend that 30% cut. Now, there's also arguments on the other side as well.
Meantime, following that antitrust hearing last week, Congressman David Cicilline sent some follow-up questions to the company and made this statement saying, "I was deeply troubled by the evasive, incomplete, or misleading answers received to basic questions directed to these companies by members of the subcommittee. It is unclear whether these responses stem from their lack of preparation, purposeful evasion, or a failure by these companies to select appropriate witnesses for the hearing." So, what does it mean, Ben, that you've got pressure from lawmakers, from the president himself, and from the attorney general now opening this investigation into these companies?
Yeah, absolutely. I mean, what you get when you have this level of pressure that goes across Washington and all the different beautiful buildings here is that you make it easier to eventually do something to the companies. You have put pressure on them, you have made them weaker, you have distracted them, and in many cases you've made them less popular in public. So if you're going to regulate them on the Hill, it makes it easier to come down and do that. You spoke to the letters that David Cicilline sent out just a few hours ago. He said that he believed that Amazon may have actually lied about its relationship with its third-party sellers and how it competes against them or allows them to sell on its platform, depending on who you're asking to. And he sent out this really interesting series of letters, and it asked basically a series of questions from his hearing, yes or no, basically repeating the question, then just says yes or no. They can't really issue a sort of lengthy explanation. If they answer yes, Cicilline has already said that he doesn't really believe what they've said, and if they answer no, well, then he has to demand more documents. So with these sorts of letters, you see how these requests can kind of ramp up incrementally here in Washington. They're sort of caught between a rock and a hard place. No matter what they do, there's just going to be more demanded of them, and that is the level of scrutiny that is just beginning here and is only going to get higher.
Meantime, Tom, we've learned a little bit more about the settlement that the FTC has struck with Facebook, as well as some additional punishments on top of that settlement having to do with how Facebook handled user phone numbers, for example. Now, we believe, and Bloomberg has reported, that the fine will be somewhere in the area of $5 billion. But what more do we know now? Yeah,
it's hard to say exactly how much more than the $5 billion. If it is just the $5 billion, pretty much a slap on the wrist for a company that's generating tens of billions of dollars, right? If they do something that is going to tie Facebook's hands, that's where investors are going to be looking really, really closely. What's important about the DOJ taking this broad look at the same time as the FTC is it just speaks to the number of levers that policymakers across DC now have access to. It is potentially, is there some criminal action that the DOJ will really crack down on? Is there a fine that can be enacted? And I think, as we've said many times, fines are no big deal to these companies that are just swimming in dollars. But can you bring criminal proceedings? Can you also force them to change their behavior? That is what sends the fear down the spine of these companies throughout Silicon Valley. And to jump on one thing that to build on one point that Ben made, not only is it across agencies, this is also bipartisan. And it's not going to go away heading into 2020. The Democratic Party, which traditionally has been seen as somewhat more sympathetic to Silicon Valley, is now some of these Democratic candidates are coming out with the most aggressive stances and potential policy moves, breaking up big tech out there. And so it's bipartisan, it's multi-agency, and time-wise, it is not going to go away. This is going to be a central issue through the 2020 campaign.
All right, something we'll continue to cover those headlines as they continue to roll out. Our executive editor, Tom Giles, you're sticking with me, as well as you, Mark Gurman, Ben Brody in D.C. Thanks so much, Ben. All right, coming up, President Trump's top trade negotiator, Robert Lighthizer, heads to China, hoping to finalize trade terms. This, as Apple asks the U.S. government for a favor to waive tariffs on parts for the new Mac Pro. That's next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Bloomberg has learned that President Trump's top trade negotiator will lead a delegation of U.S. officials heading to China. Robert Lighthizer and his team depart for Shanghai Monday for face-to-face talks with Chinese officials. This as Apple has asked the Trump administration to exclude parts of its Mac Pros from import tariffs. Remember, Apple is planning to relocate production of the line to China from Texas. To discuss it all and more, we've got our Bloomberg trade reporter, Jenny Leonard, in Washington, and still with us in Los Angeles, Mark Gurman, who covers Apple, and here in the studio, Bloomberg Tech's executive editor, Tom Giles. So, Jenny, what do we know about next week's meeting between the U.S. and China?
Yeah, Emily, we finally have the dates for the first face-to-face meeting after, the two presidents decided to restart talks and on a tariff truce. And we've had two phone conversations between Robert Lighthizer and Steven Mnuchin and their Chinese counterparts. So now we finally know they're going over to Shanghai, not Beijing this time, for a really quick trip. They're leaving on Monday. They're going to be back on Wednesday. So, if you do the math, it's roughly 24 hours on the ground, and it's really a scene setter. It's going to be the first time they're sitting down and really picking up the pieces when the talks fell apart in May, and they have to really feel each other out to see where do they even restart the talks and where do they pick up the draft agreement that the two disagreed over. So it's going to be really interesting, but there's not a lot of time for really a breakthrough, anything like that.
So obviously Silicon Valley has a lot at stake here, with the president having threatened to put tariffs on an additional $300 billion worth of goods. Mark, Apple has largely avoided tariffs on its products thus far. Now it's asking the government for a favor not to put tariffs on supplies for the new Mac Pro, which is ironic given that they're also moving production from the U.S. to China. What exactly is happening?
Yeah, this is an interesting one. So they indicated about a month ago that the new Mac Pro, $6,000 machine, it's a complete redesign of the previous, cylindrical model, is going to move from Texas to China when it comes out this fall. And now what we have is Apple asking for exemptions on the tariffs that would come into place for developing the computer in China or manufacturing in China and importing it to the U.S. So basically, they want to, have their cake and eat it too, right? So it's not a good look for Apple, I would say, and it's very interesting that they want the benefits currently of manufacturing in the U.S. while manufacturing in China.
Of course, Tom, chip companies watching closely. Texas Instruments just out with results. Are we seeing the impacts of all of these geopolitical issues on the numbers?
So we got somewhat positive news from Texas Instruments. We were bracing for the worst. The concern was that their customers were going to lighten up orders. Remember, Texas Instruments is this bellwether for the much larger electronics industry world. They're a bit of a bellwether. They sell chips that go into cars and all kinds of electronics. So when there's a problem in the global economy, it really shows up for Texas Instruments. They came out with numbers that were a little bit better than expected. Things aren't as bad as we had feared. That's the message from Texas Instruments. Their stock is up in after-hours trading. It's giving some investors encouragement that things aren't going to be as bad as previously feared as a result of the trade war with China.
Meantime, we've gotten some detail on the meeting that a number of different tech companies had with the president, with the White House yesterday. Many of them were chip companies, talking about the blacklisting of Huawei and how that impacts them. Take a listen to what Trump advisor Larry Kudlow had to say about that meeting.
With respect to the additional licenses where there are no national security implications, they have applied, and all they asked was that we speed up the application process, which is coming in a little more voluminously than we thought, and of course we agreed.
Jenny, do we know any more about how that meeting went, this meeting between the White House and tech companies, and how that could impact talks next week?
Yeah, so what we know is that the president actually showed up. It was just supposed to be Larry Kudlow and Steven Mnuchin and some other lower level staffers. And then the president actually dropped in and talked to the executives, and he heard their case that they've made to Commerce Secretary Wilbur Ross before. And he agreed. As we just heard, he agreed to speed up the process. Interestingly, we heard today from Wilbur Ross that, you know, it's not a piece of cake to go through a bunch of exclusion requests or license requests and then hand them out. So he was actually walking back a little bit the optimism that we heard coming out of the meeting from Larry Kudlow, and even yesterday the White House spokesman that said, you know, the president agreed to speed it up. It's not that easy to do, but it definitely, the readout was that it was a positive meeting. It was not just about Huawei, but the Huawei issue clearly was discussed, and the executives came away from it on a positive note, thinking, you know, they could maybe thread the needle and figure out a way to keep selling their products to Huawei that do not impact the U.S. national security. So we'll see where that goes.
Meantime, we did speak to Commerce Secretary Wilbur Ross earlier today. We do have a little bit of what he had to say. Take a listen.
In some cases, the applications have just been filed. A few of them said they haven't even gotten their applications in yet. So we will deal with them very promptly. There are 50 some odd applications from around 35 companies that have been received. And within the next couple of weeks, we expect to have verdicts.
So, Tom, does this mean that the White House is listening?
Well, it's definitely paying attention. You know, how quick is quick? And what constitutes a national security threat? That's the question that I have, and I know a lot of the tech companies want to know, well, does my product constitute, you know, does it give Huawei an advantage and enable Huawei to somehow circumvent rules and in some way constitute a threat to national security? That's the question that the tech companies still are trying to ascertain. And I think we'll get a lot more clarity once they start filtering through these applications, which, as Kudlow said, are more voluminous than they had, I think, expected.
Meantime, still major moves potentially happening in the chip industry. Mark, you've been reporting on Apple's interest in buying a chip unit from Intel to bring more of its chips in-house. What's the latest on that?
So the latest is that Apple is in negotiation stages right now with Intel to acquire its modem team. Modems are basically the little components inside of phones that allow the devices to connect to mobile data networks, so you can use your phone when you're not on Wi-Fi. It's arguably the most important component in any iPhone, any smartphone, any tablet, any smartwatch, and I'm sure laptops in the future as well. What this would do is this would lead Apple to have hundreds of more engineers and patents to build the component, giving them a big way to jumpstart their own efforts to build a modem for future iPhones and basically cut Qualcomm and previously Intel and other suppliers completely out of the equation for that really key device.
All right. Well, we'll be beating the drum till that meeting next week. Bloomberg's Mark Gurman, Tom Giles, Jenny Leonard, thank you all. Still ahead, Android users are back on the Snap bandwagon as Snapchat's growth accelerated in the second quarter. We've got more details on their latest earnings report next. This is Bloomberg. Robinhood Markets has closed a new round of funding that values the company at $7.6 billion. That is an increase of 36% from a funding round last year. Robinhood became popular with millennials by allowing people to trade stocks for free on its mobile app. It has been a rocky journey for Snapchat's parent company, Snap, but after reporting its second quarter earnings, it looks like the social media company is finally in recovery mode. After Snap's disastrous redesign last year, the company rolled out an improved version of its Android mobile app. Snap also gave an upbeat forecast, saying it expects daily users of 205 to 207 million in the third quarter. For more on the report, we're joined by Bloomberg Tech Sarah Fryer, who's been tracking the results. So, Sarah, the daily active users coming in quite above estimates. Is it all because of Android?
It's not just because of Android, it's also because Snap has made some very popular augmented reality filters that, change people's faces and change the way buildings look. Some really fun ones like a gender swap filter that you might have seen. And so it speaks a little bit to the risk of this strategy, which is that Snap is betting that it can be as creative as that every quarter. So the Android redesign is really important because that helps the app be more usable in those emerging markets where it hasn't quite caught on as much as it has in the US, but still, a long road ahead.
So I'll admit we've played around with some of these filters at home, but are they enough? It's sort of like a gimmick. Is that enough to sustain growth over the next several quarters, even years?
It's a really hard bet because you want to make sure that those 13 million new users that came in this quarter will keep coming in every quarter. And really what Snap has decided with this strategy, all the other big social companies have relied on network effects, on building a bigger and bigger network of people's friends. Snap has relied on creating something fun. So it's really about always delivering something new and interesting, whether that's content, games, interesting lenses that change the way the world works. They have spent so much on research and development to get there, and it's really hard to be consistently creative. So we'll see if they can continue to pull it off.
Now, this as the DOJ is opening an antitrust review into big tech. They haven't specifically mentioned Facebook, but we can assume that Facebook is probably on the list as it faces this settlement, $5 billion settlement with the FTC, a pending antitrust investigation by the FTC, and all the other controversy Facebook is facing. Do you think the fact that Facebook is mired in all of these other issues could be a distraction for Facebook and give Snap an advantage in the near term?
Well, I think Snap is definitely taking on some of that user distrust with Facebook and saying that they are kind of escape from Facebook. But, listen, those network effects are really powerful. And as an analyst told me just earlier today, there really is no other game in town compared to Facebook for the kind of return on investment that advertisers can get from their ads. You could look at that two ways. You could look at it as Snap has a long way that they could potentially grow, or you could just see Facebook as this dominant force that even if the FTC comes down with punishment, even if the DOJ starts looking into it, they're still so big and so good at doing what they do in terms of collecting data and targeting ads that they're very difficult to compete with.
All right, Bloomberg Tech Sarah Friar, we'll let you get back to covering those headlines as they roll in. Thanks so much for the update. Coming up, the UK is getting a new prime minister. We will talk about what Boris Johnson means for the tech industry next. And Bloomberg Tech live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. Technology. I'm Emily Chang in San Francisco. Boris Johnson, the public face of the Brexit campaign, was elected Tuesday as the next British Prime Minister, with a landslide win from the Conservative Party to succeed Theresa May. Johnson has promised to take the UK out of the European Union by the October 31st Halloween deadline. But how will tech be impacted by the leadership change? Bloomberg's Alex Webb explains.
Boris Johnson is the UK's new Prime Minister after defeating Jeremy Hunt in a vote of Conservative members today. It was quite a substantial victory. But what does this mean for tech? Well, one of Boris Johnson's most ambitious targets is the desire to bring full fibre to the home, high-speed broadband to every household in the country by 2025. The existing target was for 2033, a goal that Johnson called laughingly unambitious. He doubled down on that target today, even though a lot of industry figures have said there's no real detail on how he would achieve it and are puzzled as to how he would get there. There is a suspicion that maybe one of the reasons he may set set such a target was that his core constituency among Conservative voters would have been in the regions, in the countryside, people who don't have good broadband right now, and so it was a real carrot to get their votes going his way. Some also see it as sort of classic Boris Johnson ambition without any real sense of what is realistically achievable, and therefore concerned about the implications for the targets he has for Brexit, for example. Nonetheless, there is likely to be some acceleration under his leadership if he's really going to push these targets, but it seems a very much an overly ambitious dream to reach that goal. This is Alex Webb for Bloomberg Opinion in London.
Now back to our top story. Shares of Apple, Amazon, Facebook, and Alphabet down in after-hours trading. This on news that the U.S. Justice Department said it's investigating whether tech giants are harming competition. Makin Delrahim, the head of the antitrust division, laid out the department's reasoning, saying without the discipline of meaningful market-based competition, digital platforms may act in ways that are not responsive to consumer demands, and added the department's antitrust review will explore these important issues. To discuss in Washington, we've got Chris Calabresi, the vice president of policy for the Center of Democracy and Technology, and with us here in the studio, Eric Hippo, managing partner of Laro Hippo, an early-stage venture capital firm. Eric, what's your take on the rising pressure at the highest levels on big tech?
Well, it's a major reversal from the lax enforcement that we have seen in previous years and previous administration. The five of the top 5 companies in America are tech companies, and suddenly we are saying that they're anti-competitive and subject to antitrust activity.
Do you use the word lax, implying that they haven't been doing enough?
I think they were lax on the privacy issue for sure, and we're now seeing perhaps that the FTC is going to fine Facebook a record fine of $5 billion. That's kind of separate from antitrust. I find that antitrust laws are going to be very difficult. I think they're going to be very difficult to enforce because antitrust laws really are look at the harm to the consumer, mostly in the rise of prices and so on. Most of these services are for free. So it's going to be very difficult to demonstrate that, in fact, they are harming consumers in that respect. So they're going to have to use, if they really are going to go after these companies, they're going to have to use other rules than the antitrust rules.
Chris, you wonder, with obviously pressure coming from multiple federal agencies, the president himself, and lawmakers on both sides of the aisle, is there enough will to make an antitrust case when it comes to these 4 companies?
Yeah, I think there is. I mean, that's not to say that it's going to happen, but I was honestly not as surprised by this news. I mean, we know that the antitrust division is considering competition issues in this space. They've been signaling it for a while. The FTC has been doing the same thing. So, I mean, honestly, DOJ is always looking at these companies. Whether they'll be able to, in fact, decide to bring a case, I think it's a separate issue. But until we hear more, I think it's more of a wait and see.
So, the question has been asked over and over again, are regulators doing enough? Would you say that now? Are regulators doing enough?
Well, I mean, there's so many issues coming to tech today. I mean, we've talked a little bit about privacy. There's competition. There's, conservatives talk about anti-conservative bias. So, I mean, it's sort of enough in what area? I would say certainly we need more in privacy. We need baseline privacy rules in the United States. That goes without saying. Whether we're doing enough in competition, I think that remains to be seen. The competition laws are very flexible, and they may, in fact, get to this kind of conduct.
Eric, of the big 4, Apple, Amazon, Alphabet, Facebook, which do you think prevents the best case for a breakup?
Oh, for a breakup. Okay. Well, the obvious one is Facebook because of its acquisition of WhatsApp and Instagram many years ago, when the government didn't think that they were a threat as a monopoly. Today, particularly since Facebook has announced that they're going to integrate these 3 messaging platforms, that would perhaps go for a breakout. But these things take forever. If you remember, the case against Microsoft took years and years, and it didn't really do much to hurt Microsoft. So I think there's quite a bit of political posturing in all of this. I don't know that it will lead to anything.
Meantime, Chris, of course, we've got this pending fine from the FTC on Facebook as the result of a settlement, possibly some more punitive actions on top of that. We don't know what yet. But do you think that's actually going to have an impact?
Oh, yeah, I definitely do. I mean, $5 billion is a big number. I mean, that's not, I mean, especially when you consider previous fines in this space are in the tens of millions of dollars. I mean, this is astronomically more than that. And when you look at it as sort of balanced against the need for example, better security and more privacy, I think that companies are willing to take on those costs in order to avert these kind of fines. But really, the message for me from this is that the FTC is always going to be somewhat limited in what it can do. Congress needs to create more baseline authority for the FTC and other entities to be able to enforce privacy laws so we can actually get stronger privacy across the board.
Eric, is all of this pressure on big tech good for startups, good for venture capitalists? Because you're investing in the companies that are trying to disrupt these companies and that have made it very hard to disrupt anything.
Well, maybe to some degree we'll see some opening for new companies, but it's still very hard to see how you're going to take on as a startup, how you're going to take on Amazon or Apple or Facebook for that matter. So I think I don't foresee anything happening in the near future that will make any difference.
Meantime, we've got the Attorney General signaling that the company's time to comply on various encryption issues is running out. Take a listen to what we heard from the Attorney General earlier today.
I am suggesting that it is well past time for some in the tech community to abandon the posture that a technical solution is not worth exploring and instead turn their considerable talent to developing products that will reconcile good cybersecurity to the imperative of public safety and national security.
So, Chris, the government and the DOJ specifically has been pressuring technology companies to give law enforcement access to encrypted communications. What's your take on this on top of all these other issues?
Well, I mean, it does sort of look like DOJ is piling on. I mean, there's not a whole lot of new stuff here, right? I mean, it's the same old tired argument. We want you to build this backdoor into your communications, but don't worry, only the good guys, only law enforcement's going to be able to walk through that door. And I mean, even DOJ acknowledges that this creates huge cybersecurity issues. They just would like tech to somehow fix them. So it's hard not to see it as sort of exploiting the existing political climate, given that the Department of Justice hasn't actually proposed any technical solution to help us get there. Rather, it's just tech, you're really smart, you'll go figure it out.
All right, lots more to continue to follow. Chris Calabresi of the Center for Democracy and Technology. Thanks so much. Eric Hippo of Lara Ventures, you're sticking with us. Coming up, 2018 was a record year for venture capital, but how does 2019 compare? We'll talk about the global funding climate next. This is Bloomberg. According to PitchBook, U.S. venture capital investment reached $130 billion in 2018, surpassing an all-time high from 2000. And despite trade tension and a global economic slowdown, 2019 is shaping up to be another big year. Through the first half of the year, U.S. investment has reached $66 billion, on track to match 2018's record levels. Joining us to discuss the state of VC, Lara Hippo, managing partner Eric Hippo, still with me. Lara Hippo is an early-stage venture capital fund based in New York. So how does this year compare to last?
So far, so good. It's as you mentioned, it's on pace. Maybe it might even be a little bit better than on pace. The venture capital industry in the United States is booming. Lots of money to invest. Lots of great companies to invest in.
So what are you most excited about? What sectors are you most excited about?
Well, we're doing quite a bit these days in digital health. So finally, perhaps the healthcare system is going to open up to innovation. And the reason for this is because in the healthcare system, everyone is very guarded about their data. All the big providers keep that data. That data is starting to leak out. People are starting to give access to that data. So if you think of building services, communications, tracking patients, and all these kinds of things, access to the data is the key. There's a lot of innovation in this area.
And how would you compare the state of funding in the United States to what's happening globally in the midst of these macroeconomic issues, a trade war with China, and a broader economic slowdown?
It seems like other parts of the world are also going very, very well. Europe in particular has seen a lot of investments. Latin America has seen new funds. And I think China might be slowing down a little bit because American VCs are a little bit more cautious as to what the future is going to be. But I think globally, you're seeing record investments.
Given the acceleration of the IPO market, are you trying to convince more of your companies to take the public route and just pull the trigger?
For sure. I've always thought that being a public company is a great thing, despite all the hassles and blah, blah, blah. I think that to have your own currency, to be in charge of your own destiny, to be able to reward your employees with stock options is a fantastic thing. What we're seeing is a very healthy IPO market this year. And what we're hoping is that the public investors are going to get a little bit more encouraged to take a little bit more risk and want our companies to go public a little sooner so that they can also participate in the upside.
So do you think we're going to continue to see more tech companies going public the second half of this year and next year?
If the market holds, there's a long list of companies that have filed and that are ready to go.
So what companies are you most excited about in particular?
Well, in my portfolio, we have a lot of companies, but maybe I'll mention K-Health. We were talking about digital health. This is a company that does AI, artificial intelligence-based diagnostics, which is a trend of the future. In the future, when you speak to your healthcare provider, your doctor, or your hospital, you're first going to go through a diagnostics, an AI-based diagnostics. In the case of K-Health, they just signed a major deal with Anthem, and Anthem over the next few years are going to deploy it to all of their patients.
So then, given the acceleration of the IPO landscape, what about M&A? Are more companies thinking we can go it alone, we can take ourselves public, or that perhaps selling or being acquired is better?
Well, not everybody can go public. So you have to have a certain size, you have to have a certain forecast. The M&A market is also quite healthy at the moment. We've seen for this year so far a better year in terms of exits than we did last year. But those companies that have a choice and can go public, my view is that they should.
How concerned are you about the trade issues and the growing sort of sense of isolationism in the United States and other countries? Obviously we're seeing it in the UK, poised to pull out of the European Union and China as well. What does that mean?
It's worrisome because it's a about face in terms of the politics that we've had in the past 20 years of globalization, open markets, freedom of ideas, freedom of people moving to be able to develop their ideas wherever they want. This goes hand in glove with the anti-immigration movement. All of that is not good for innovation, not good for us.
So what does it mean for innovation?
It means that you're going to see silos again. The people in China are going to do their own thing. They're not going to collaborate with people in the United States. It's going to slow us down. It's going to slow us down. But on the other hand, I don't think this is a sustainable long-term policy. I think that globalization is here to stay, and this is a course correction that maybe was needed, particularly in the case of China, but that it's in their best interest. It's in our best interest to continue with open markets.
All right, Eric Hippo, Lara Hippo Managing Partner. Good to see you here on the set.
Thank you.
In San Francisco. Thanks for coming. Still ahead, looks like SoftBank's Vision Fund won't be a one-hit wonder. We'll have details on how Masayoshi Son plans to replicate the $100 billion plan next. This is Bloomberg. Alibaba has announced it will now allow U.S. merchants to sell on Alibaba.com, its wholesale platform. The Chinese e-commerce giant sells to 10 million companies around the world, 1/3 of which are in the United States. Previously, U.S. companies could only buy items from the site. The initiative could generate new income and goodwill for Alibaba in the United States as trade tensions with China continue. Bloomberg's Alex Steele and David Weston sat down with Alibaba's head of North America B2B, John Kaplan, to discuss.
So today is a great day for U.S. small businesses. Manufacturers and wholesalers can join Alibaba.com today to sell to the world. The platform's now open to enable those businesses to reach the 190 countries, 4 corners of the globe, where we have 10 million business buyers on the platform.
So how big is that business, do you estimate it to be?
So that business is $23.9 trillion, and in fact, it's 6 times larger than the B2C market. So when people
that's fascinating. I did not realize that.
Correct.
B2B is many times larger than the B2C.
Correct. And Alibaba.com is the largest B2B marketplace on the planet. And what we've built are simple to use tools for small businesses to have a global storefront, to market to customers, and then to reach deep into the globe so that they can sell their goods.
Okay, besides being right here on Bloomberg,
yes,
how do I know that if I'm a U.S. company today, that I know I can now sell into Alibaba.com?
So today's the big announcement, but in fact, 1/3 of the demand, the buyers on Alibaba.com, are here in the United States. So those folks we've been doing business with for 20 years, since Jack founded the company. So now what we're saying to them is, you've been sourcing on the platform, now you can in fact sell to the world on the platform.
Any plans to go B2C?
Yeah, we are entirely focused on the B2B market. It is $23.9 trillion. Alibaba.com is purpose-built to help small businesses sell to the world, and so we're very focused on helping digitize small businesses around the globe. One interesting statistic, 70% of U.S. small businesses do not sell online today. So this market is not yet digitized, and so what we've created are simple-to-use tools to help small businesses get online.
I mean, it's hard to say the word competition and Alibaba in the same sentence, but how do you wind up competing with other areas? Like, who are your competitors, and what does that wind up meaning?
So it's an interesting space, because in fact, the value chain for small businesses, the value chain for B2B is so complex that no one has digitized it end to end other than Alibaba.com. So we've actually created a platform that enables a small business to message, talk to, negotiate with, pay, handle the logistics for orders end to end. So I think we're in a class by ourselves.
How does this read against some of the U.S.-China trade tensions? Does it affect you at all?
So our business has seen triple-digit growth, and this plan has been in the works for many years. I joined Alibaba.com in 2017, and the transformation of our business from yellow page business to end-to-end procurement platform is now adding the globalized supply to the platform.
That was Alibaba.com's head of North America B2B, John Kaplan, and Bloomberg's Alex Steele and David Weston. Meantime, SoftBank is close to announcing the launch of a second technology investment fund modeled on its $100 billion Vision Fund. For all the details, we're joined now by Bloomberg Tech's Ellen Hewitt. So what do we know?
Well, we know some things and we don't know others. We know that our reporting has shown that SoftBank is getting ready to announce a second Vision Fund that could come as soon as this week or early next. What we don't know is the official size of the fund or who exactly the investors are going to be. There has been some reporting that we've done that suggests it will be probably quite large, similar maybe to the $100 billion first Vision Fund, which was sort of an eyebrow-raising, record-breaking, huge weight in Silicon Valley. And it seems like the reporting suggests that some of the biggest investors in the first Vision Fund are going to be coming back and investing again in the new Vision Fund. So that includes the sovereign wealth funds of Saudi Arabia and Abu Dhabi.
Now, it's interesting because when Masa unveiled this plan, there was a question of, will there be enough places to put this money? We've seen SoftBank drive massive rounds into rising tech startups, giving them essentially a lifeline for potentially years. How successful have the first Vision Fund's investments actually been?
Well, in June, Masa was talking about some of the successes of the first Vision Fund, and he said that they've had a 62% return on the funds that have been deployed already, and that's something about like $64 billion out of the $100 billion. And that has included enormous checks to big names in Silicon Valley like Uber and WeWork. SoftBank alone, both from the Vision Fund and from SoftBank Corporate, has put about $10 billion into WeWork. And so you can see through that and through other major checks of like hundreds of millions of dollars into some of these other companies in the Valley that SoftBank has made quite an impact on funding in the last couple of years. They've been big investors in Slack also, another company that went public this year. They haven't obviously deployed all the capital in the first $100 billion. It's a lot. It does look like if this plan goes forward that they are using that momentum from early successes of the first Vision Fund to see if they can raise a second one.
Well, and I wonder how much those early successes is really Uber alone, because Uber obviously went public, and SoftBank is the last investor to get in at a valuation that was below the valuation at where it's trading at now. I mean, there was much greater optimism that Uber would, soar past a $100 billion valuation, which it has not, and SoftBank got in, essentially just below the IPO price.
Yeah, and I mean, this may just be a testament to the optimism of Masayoshi Son, right? Like, he is someone who sees huge opportunity in these growing areas of the tech sector and just is looking forward to trying to replicate that with the second fund. And with WeWork alone, we've seen the valuation of WeWork change in subsequent rounds of funding as SoftBank alone is the only new investor. So they see opportunities to reinvest in companies even if they aren't being followed by other investors willing to write the same size checks.
All right, Vision Fund Part 2. We'll keep following. Bloomberg's Ellen Hewitt, thanks so much for that report. And that does it for this edition of Bloomberg Technology. We are live streaming on Twitter. Find us there at Technology and follow our global breaking news network TikTok on Twitter. This is Bloomberg.